You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday. TGIF. 11th day of July, 2025. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room. So to get in there, you have to be one of our traders or taking our 1-week free trial. If you have not yet taken the 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. And you don't want to wait till Monday, you want to do it today. This way we can get your indicators up and indicating. You'll have the weekend to get familiar with them, and then your trial will officially begin Sunday night at 6 p.m. Eastern when the markets open, and will run all the way through next Friday afternoon at 5 p.m. Eastern. There's no credit card required to take the trial. We want you focused on what's being taught so that at the end of the 5-day trial, you can make a well-informed, intelligent decision whether or not trading is right for you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. That's everybody, everywhere on planet Earth and points beyond with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, maybe you're on vacation, but you still want to join live. Some days you'll be busy, can't join live, but want to get caught up later. Well, the good news is you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. That's right, we are celebrating our 20th year anniversary. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to our little corner of the world, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips. And it lets you know we've been around for a minute. And again, it shows you how we've evolved over the years. youtube.com/CFRN. Our schedule is posted here for each and every afternoon broadcast. Michael will join us at the top of the hour for a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for about 30 minutes. But right now, we're going to jump into our daily devotional, which is where we start each and every day. Now, we began a new topic yesterday, commitment to community. So this is day 2 of 5. Today's scripture is Luke 3:21 through 23, and I'm going to share it with you from the NIV translation. When all the people were being baptized, Jesus was baptized too. And as he was praying, heaven was opened, and the Holy Spirit descended on him in bodily form, like a dove. And a voice came from heaven, "You are my Son, whom I love. With you I am well pleased." Now, Jesus himself was about 30 years old when he began his ministry. He was the son, so it was thought, of Joseph. Again, that was Luke 3, verses 21 through 23. So, community. What's it like to do life together with other believers? Communion with God comes first. The dictionary definition of communion is the sharing or exchanging of intimate thoughts and feelings, especially when the exchange is on a mental or spiritual level. Communion with God means to have fellowship with God. It is His communication to us and our obedient response to Him. Whether we realize it or not, it is why we were created and fulfills a deep need for all of us. Nothing else will plug that hole. Not booze, not drugs, not video games, not somebody liking your post on Facebook. Communion with God comes only out of our union with Christ, meaning we have surrendered our lives to Jesus and have been reconciled to God through Jesus' death and resurrection. That is the gospel, the good news. It is not based on our ability to keep a bunch of rules. Rather, it's all about Christ's finished work on the cross. Because we are united with Christ, we are able to participate in communion with God. Union establishes the relationship. Communion is the mutual communication and experience that happens with it. Whereas our union with God does not increase or decrease, our communion with Him can and does. This is why it is so important for us to follow Jesus' example, who throughout the New Testament modeled time alone in communion with God. Remember all the times that he would pull away from the disciples or all the throngs of people and just go alone and be still. Talk to his Father. Before Jesus began his ministry, he communed with God. Before Jesus appointed his 12 apostles, he communed with God. Before Jesus taught his disciples how to pray, he communed with God. Before the Son of God approached critical moments, before he completely exhausted himself physically and emotionally, before he wrestled with temptation, he communed with God. He showed us how to, in every season and circumstance, to have communion with God. God invites us to not only have salvation in him, but also to have a life-giving relationship with him as well. We do that through fellowship or communion with God first. At the heart of communion with God is communication with God. Spend time in prayer. Ask God specifically how you can better serve him and letting him know your needs. Thank him for the blessings in your life and confess any sin or struggles that you're currently facing. End your time with him in quiet and silence, actively listening for anything his Spirit might be trying to convey to you. Whatever it is, respond with obedience. Now, I've said this for a long time, and I try to practice it in my own life. If I have 10 minutes to commune with God, I try to spend just 1 minute telling God what's on my heart and what's on my mind. Not that he doesn't already know, but I want him to know that I believe our relationship is deep enough that I can be open and honest with him. And then the other 9 minutes, I do my best to simply be still and know that he is God and listen through the power of the Holy Spirit to make sure I hear and understand exactly what it is God wants me to do in every situation I face. Let's pray. Heavenly Father, just as Jesus humbly came to be baptized and you affirmed him as your beloved Son, help us walk in humility and obedience. Remind us that we are your children, chosen and loved. May we live each day with purpose, knowing you are pleased when we follow your will. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 354 points. The NASDAQ is down 22. S&P 500 is down 24. The Russell 2000 is down 24. And for the Russell, that's a little over 1%. Now, that's a whole lot of red, but remember, as futures traders, We like to see all 4 of the major indices red or green, doesn't matter, because with futures you can be long or short and long again all in the same hour if that's what the chart in front of you is telling you to do. When they're all the same color, that's when you get better follow through on your trades. So red or green, as long as they're the same color, should be a good day of trading for you. Now, that's a whole lot of red, but you may have heard, well, we'll talk about this in a few minutes. Let's keep going. In the commodity basket, crude oil up $1.88, trading 68.44 last. That's a gain of almost 3%. Gold is up $46. Make that $45.90. Trading 33.7160 last. That's a gain of almost 1.5%. And silver, oh, you're going to love this. Silver's up $1.51, trading 38.81 last. That's a gain of a little over 4%. Now, when the price of silver moves $1, that's worth $5,000 per contract traded. So let me say it again. Silver is up $1.50 on the session. That's $7,500 per contract traded. In the Asian markets at the close, the Nikkei dropped 76 points. The Shanghai gained a half a point. The Hang Seng gained 111. And in the European markets at the close, FTSE down 34. The DAX down 201, almost 1%. And the CAC down 72, almost 1%. So we had a mixed day in Asia. It was a red day for the UK. And so far, it's a big red Radio Friday here in the US of A. So let's go to the global news, then we'll do the Wall Street news, and then we'll do the local news. A federal judge in New Hampshire issued a nationwide block yesterday against President Donald Trump's executive order ending birthright citizenship. The decision comes nearly 2 weeks after the Supreme Court ruled 6-3 to limit federal judges from issuing nationwide injunctions on Trump's executive orders, but left open the possibility in the case of class action lawsuits. Well, here's what I have to say to that judge. Don't send your robes to the dry cleaner. Where you're going, I don't think you'll need them. In his decision, Judge Joseph LaPlante appeared to acknowledge the Supreme Court's ruling by granting class action status to a lawsuit brought last month by the American Civil Liberties Union. The suit seeks to represent babies born to people living in the U.S. illegally or temporarily. Plaintiffs and advocates, including an unnamed pregnant woman and 2 parents of infants, claim more than 150,000 babies will be born annually in this class. Does that make it right? I think not. LaPlante, who was appointed by former President George W. Bush, cites the 14th Amendment definition of U.S. citizenship in his ruling. At issue is the phrase, subject to the jurisdiction thereof, and the status of individuals born stateless. Yeah, let's see how the Supreme Court handles this. This guy is straight up defying the Supreme Court. And if these activist federal judges are not going to follow the rulings of the Supreme Court, Well, I guess they might as well just pack up their robes and go home. The Defense Department has purchased $400 million of stock in MP Materials, operator of the U.S. sole rare earths mine. This was revealed by the company yesterday. The deal requires MP Materials to build a new magnet manufacturing facility in the U.S. and makes the Pentagon the company's single largest shareholder, owning 15% of all shares. MP Materials stock rose roughly 50% on the news, the highest price point in 3 years. There are 17 rare earth elements in the world. The deal gives the U.S. military preferential access to 2, neodymium and praseodymium, at a 10-year minimum price of $110 per kilogram. Those ingredients are found in commercial items like car batteries and smartphones, but also weapons, including F-35 planes, drones, and submarines. China operates the largest rare earths mine and accounts for 70% of the global market. MP Materials operates the second largest mine in Mountain Pass, California. The deal comes as the Trump administration works to build up U.S. independence in the industry and amid the ongoing trade negotiations. Now, this will blow your mind. The original Hermes Birkin bag sold yesterday at Sotheby's, Paris, for approximately $10 million. The most expensive handbag ever sold at auction. The black leather prototype, featuring actress Jane Birkin's initials, a non-detachable strap, and gilded brass hardware, was purchased in under 20 minutes by a Japanese private collector. So the next time you get ready to scold your wife about buying that expensive purse, just remember, maybe someday it'll be worth more. Now, this particular bag story began in the 1980s when the actress met Hermes CEO Jean-Louis Dumas on a flight. Frustrated with her handbag, Birkin described her ideal bag to Dumas, and they famously sketched the design on an air sickness bag. Today, the bag is a global symbol of exclusivity and wealth, with prices for new bags typically ranging from $10,000 to $60,000, and wait lists that can last years. Only select clients, often those who have spent thousands on prior purchases, are given the opportunity to buy them. Birkins are widely considered investment pieces, with some estimates showing an average annual value increase of 14.2%. Each bag is made by a single artisan and reportedly takes at least 18 hours to construct. Imagine you put in 18 hours of work and you create something worth $10,000 to $60,000. Nice work if you can get it, I guess. All right, let's go to the Wall Street news. President Trump surprised markets late yesterday with a letter announcing a 35% tariff on Canadian goods. But some notable industries, such as energy, could get some relief from the new threat. Guidance offered today, this morning, by the White House is that this 35% rate, if Trump follows through, will increase the rate on goods currently facing a 25% duty, but that key carve-outs are likely to be maintained. A White House official told Yahoo Finance that the expectation is that the situation will not change for United States, Mexico, Canada agreement-compliant goods, which are often exempt from tariffs entirely, as well as for energy products like oil and a fertilizer known as potash. Yet the officials stress that no final deal has been drafted, and Trump has not yet made a final decision. He holds all the cards. Well, as you know from the numbers I just gave you, stocks are down today. Basically because Trump threatened Canada with that 35% tariff I just mentioned. The S&P, well, I already gave you the numbers. Vietnam. This is from Bloomberg. Vietnam's leadership was caught off guard by U.S. President Donald Trump's announcement last week that it agreed to a 20% tariff, and the Southeast Asian nation is still seeking to lower the rate, according to people familiar with the matter. Straight after last Wednesday's call with Trump, Vietnam's party chief, Tu Lam, told his negotiating team to keep working to bring the tariff rate down. People asked not to be identified as the talks are confidential. The 20% figure came as a surprise as Vietnam believed it had secured a more favorable tariff range. Before the call, Vietnam had been pushing for a tariff in the 10 to 15% range. Well, we'll see where that ends up. At least they're coming to the table to make a deal. Now, I started to tell you this earlier, but I said I would wait. With all the blood in the street on Wall Street, Bitcoin has surged to new highs above $118,000. The token's price action coincides with AI giant Nvidia's surge to a $4 trillion valuation, highlighting crypto's tie with tech. The tech-heavy NASDAQ composite hit a fresh record on Wednesday, and the S&P 500 was headed that way on Thursday. I think it came up a little short. Retirement investors were not content to ride out the second quarter's choppy market, according to Alight Solutions' 401k index. Trading levels in these retirement accounts hit the highest levels in 5 years, as investors in 401ks actively shifted funds from stocks to fixed income. People pulled large sums of 401k money, mostly from target date funds. Some folks swapped company stock and mid-size U.S. equity funds for more conservative bonds and, to a lesser extent, money market funds and stable value funds. Well, those folks have a name: panicans. Trump told them not to panic. Today's blood in the street will be short-lived. When we go to the charts here in a few minutes, I'll show you exactly where I think price is headed. Investors, in fact, swapped their equities for fixed income on 40 out of 61 trading days, with 42% of inflows going to bonds, according to the data. Yeah, and bonds aren't doing so hot, are they? The panicans are going to be really panicking when we see the rally return. From Reuters: of all the riddles wrapped in the digital wallet sending funds to President Donald Trump's World Liberty financial crypto business, a little-known entity last month became the biggest. A venture calling itself Aqua One Foundation and saying it is based in the United Arab Emirates, announced in late June it had bought $100 million worth of World Liberty's crypto tokens. becoming the largest publicly known investor in the business. Yet a review by Reuters of corporate registries, Aqua One's digital profile, and other public information reveal almost nothing about the source of its capital or the person it named as its founding partner, Dave Lee. Reuters could not find a way to contact Lee directly. An Aqua One press release, which was published on Reuters as sponsored content, listed an email for a person named Dora Lee as the media contact. In response to Reuters' request, the company last month provided an unsigned statement saying, "At this stage, we are not disclosing additional information beyond what has already been publicly shared." The mystery man, the $100 million mystery man. And from Bloomberg, silver jumped to its highest level since 2011 as U.S. premiums rise and the spot London market shows signs of tightness. Silver rose 1.6%, $37.59 an ounce at the writing of this article, the most since September of 2011. U.S. silver futures climbed even higher with September contracts. That's what we're trading right now, is the September contract, hitting $38.46 an ounce. Such a wide price gap is unusual, and it is typically eliminated quickly through arbitrage. Now, I've talked about this a lot over the years. Silver has hit $50 twice in history. Once when the Hunt brothers tried to corner the market and ended up going bankrupt in the process. And back in 2011 when it kind of just did its own thing. Now, important prices in important areas are almost always tested. My theory is that this time, when silver hits $50, there may be a little pullback, but I believe we're going to break through that $50 mark for the first time in history. And then on the retracement, $50, which has been resistance throughout all of history, will become support as silver begins to make its way towards $75 or even $100 an ounce. Remember, with gold, over 90% of all the gold ever mined is still in existence. Whether it's in gold bars or gold coins or gold jewelry, it's still here. Not true with silver. Silver gets used up in industrial applications. So probably 20 to 30% of the silver ever mined is still around. And when God created the heavens and the earth, whatever he put in the belly of the earth, that's all there is. And because silver has been quiet for so many years, there hasn't been a lot of exploration going on. So as price continues to rise, scarcity is going to play a huge role in breaking through that $50 barrier. Again, my opinion, not investment advice. AI may determine the price of your next plane ticket. If you're struggling to snag the cheap Delta ticket everyone else on your trip got, AI might be to blame. Delta Airlines uses an AI pricing tool on 3% of domestic flights and aims to apply it to 20% by the end of the year. Delta is incrementally deploying technology designed to identify the maximum a traveler will pay, because the more cases we give it, the more it learns. It's called machine learning. That's from a student who is on his way to becoming a certified AI developer, courtesy of Google. Though technically in a heavy testing phase, the AI tool from the Israeli company Fetcher figures into Delta's plans. Fetcher functions like a constantly on super analyst and is ushering in a full re-engineering of how we price. What do you think AI is looking at? Is it looking at how much you're worth? You know, a lot of what you're worth is a matter of public record. Things like real estate and other things. So, might the AI model charge you more for a ticket than it would a single mom on welfare? I think that's the idea. From Bloomberg, the creator of Blue Lock. Rivals thought kids on Roblox might like a soccer video game with an anime vibe. It sold a few months later for more than $3 million. The 19-year-old, who asked that his name be withheld because he has never shared it publicly, made the game in just 3 months with the help of co-developers. It attracted more than 1 million simultaneous players following its release last year, generating $5 million a month in purchases for Roblox Corp. Do Big Studios, an owner of other Roblox games that had helped develop Blue Lock, bought the game in March, delivering a hefty payout to its teen owner. A 19-year-old kid, in 3 months, built a game that he sold for $3 million. So, if your 40-something-year-old son is still in the basement playing video games, you should go down there right now and say, yo, stop playing and start developing. Federal judges have continued to order sweeping halts to President Donald Trump's policies in the immediate aftermath of a U.S. Supreme Court decision that limited their use of such powers. We basically already covered that. Let's just leave it at that. I don't want to get my blood pressure up. And here's the last from Wall Street. Security researchers found that they could access the personal information of 64 million people who had applied for a job at McDonald's, in large part by logging into the company's AI job hiring chatbot with the username and password, you're not going to believe this, 123456. Ian Carroll and Sam Curry wrote in a blog post that during a cursory security review of a few hours, they found the password issue and another simple security vulnerability in an internal API, which allowed access to job applicants' past conversations with the chatbot called McHire, supplied to McDonald's by Paradox.ai. I'm not making that up. It's called McHire. The personal data seen by the researchers included applicants' names, email addresses, home addresses, and phone numbers. There you go. Let's go to the local news. As you know, Logic 247 is currently on hiatus. This Sunday night will mark 2 weeks since we went on hiatus after issuing exactly 20,000 alerts over the last 361 weeks. And what we averaged on a weekly basis was about 12% of those alerts being stopped out based on simple market structure and a simple process that we teach all of our passport holders. Now, 361 weeks is a long time, and 20,000 individual handcrafted alerts kind of wore me out. So I've paused Logic 247 for now. But our original alert service, which was around years before Logic 247, the concierge trade alerts, it's still cooking. Now, these targets are published 5 minutes ahead of the open most evenings, unless life somehow gets in the way and I'm unable to. And I always let everyone know in the Telegram discussion group that I won't be able to get them out 5 minutes ahead of the open. But I've got a pretty good record of getting them out ahead of the open. So what does that mean? Number one, it means if you're one of our traders, you need to read this information and make sure you understand it. You don't ask questions. Every one of our traders and our trial members had every one of these targets last night, 5 minutes before the Friday session began at 6 p.m. Eastern. The S&P 500, Dow, the Russell, crude oil, the NQ, gold, and silver. Go silver. Okay. Now we can go to the charts. My favorite part of the broadcast. Because it's a language I speak. And I can teach you to speak. Now, I posted a chart this morning in the discussion group highlighting the fact that price is currently trapped between blue and climbing resistance and the black step line support. We've been consolidating sideways now for 1, 2, 3, 4, 5, 6, 7 trading days. From support to resistance, back to support, back to resistance, over and over again and again. Now, as you can see, the BBC has risen to the 38% fib extension. The market's breaking down today. If it holds where it is, we're going to see continued consolidation. We don't have any high impact news coming out until Tuesday. We had none today. So there's really nothing to drive the market. I keep hoping Trump will put out some kind of a post. Because again, we don't care if it goes up or down. As futures traders, we can be long, short, long again, all in the same hour. That's what the chart in front of us tells us to do. Now, this green line is called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, as it did on February 21st, we're bearish and anticipate lower prices. And when price crosses above the green line, as it did on April 24th, we become bullish and anticipate higher prices. No matter what strategy or methodology you use, price always reverts to the mean. Not just futures, but stocks, crypto, Forex, ETFs, all markets. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. So once we got below the BBC, we had a nice leg. Remember, this is a daily chart. Price reverted to the mean, or in our parlance, pulled back to the BBC. Here, 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 here. And then finally, on April 24th, it traded through and closed above it. So we got a leg and a retracement, and the pullback held. And then another leg and a retracement, and the pullback held. Another leg and a retracement, and the pullback held. A leg and a retracement, and the pullback held. I guess what I'm trying to say is the pullback holds more often than it doesn't. That's a good thing to know. Jot it down. Now, why are we looking at a daily chart? Nobody trades a daily chart, right? Wrong. The institutional traders, the guys over at Goldman Sachs, BlackRock, State Street, and others, the institutional traders, They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, whatever you trade, spend 2 minutes with the daily chart before you drop to your smaller time frame and actually start trading. Number one, it gives you a free look over the shoulder of the deep pockets that actually move price. And as you can see, this is what they've done for the last 5 days. Not much of anything in the grand scheme of things. Not only are you able to get a free look over the shoulder of the deep pockets so that you can trade with the flow as opposed to trading against the flow, you're able to identify days, weeks, even months in advance where the market is most likely to find potential resistance and potential support. Now, we've been unable to break through this level. Right here we have the 62% fib extension and the 100%. The reason we had to bring the fib extensions into play is because we hit the all-time historic high. So when you look left, there's nothing to work off of. So we take the same 14th century math that's used to create fib retracements and use it in a slightly different way to project where price may find resistance if it continues to climb. Here's the 62% fib extension. Here's the 100% at 65.85. Now, Goldman Sachs had a S&P 500 target on the year of 6,600. I'm sorry, 6,000. But last week, they revised that to 6,600. Do you think maybe they're looking at the same chart? Now, we're only in July, so the end of the year, December 31st, that's a pretty small distance for price to travel over 5.5 months. So that tells me we're going to see that retracement back to the BBC and the 38% fib retracement. We might even drop to this spot right here at 60.59. We might even make it back to 59.59. I encourage you, spend 2 minutes with the daily chart of whatever you're about to trade. Do it for a month and see if it doesn't change your trading results. Not just on any given day, but amortize it over the entire month. All alerts are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago. They say if it's not broke, better leave it alone. So I have. The vertical lines that you see separate today, Friday, from yesterday, Thursday. Back here's Wednesday. Back here's Tuesday, and so on. This was the opening candle last night. Now we're above the BBC, so we anticipate higher prices. We got higher prices, but we ran into red and falling, so we didn't make it all the way to the long target. But we certainly made it far enough to get your goal for the day before we ran into this resistance. Now, yesterday, during the live broadcast, we drew in this window of opportunity, which was a 4-point window, but it only filled about 2.5 points. Sometimes that happens. We also drew this 3-point window in yesterday, and we filled it. I drew that one last night, right after the market opened. And then this 2-point window, we drew this one live yesterday on the broadcast. Now, these horizontal lines that you see, those are our weekly trading zones. When price drops to a zone, we expect support until proven otherwise. When price rallies up to a zone, we expect resistance until proven otherwise. And as you can see, the pullback to the BBC pulls more often than it doesn't, whether it's pulling down from above or pulling up from below, like it did right here. So we dropped, we filled the 3-point window, the 2-point window, and then last night I drew this 4-point window and I published it in the discussion group. It's got a timestamp. Did we fill it? Yep, we sure did. Now, we had a 2-point window that had been previously untouched, and a window of opportunity remains valid until it's triggered. And so as you can see, look at the horizontal line on my cursor. That 2-point window filled last night, and it also marked the low of the session. Now, that 2-point window was based off this market structure right here: Friday, Thursday, Wednesday. So it was on Wednesday's broadcast that we drew in this 2-point window, and it got filled today, Friday. When the market finds support, it will naturally go look for resistance. Here we found support at the zone. That sent us up to the zone above where we found resistance. Resistance sent us back to support. Now, when price encounters a weekly trading zone, which we've published for the last 15 and a half years, they come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So one of three things happens. 70% of the time, it's going to be this: consolidation. 20% of the time will be rejection. 10% of the time, the slice. So as you can see, this big red candle sliced through this zone like it wasn't even there. But when it ran out of steam and found support, it retraced back to the zone it sliced through and then continued in the direction of the slice. Pretty nifty, huh? Now that the market finds support, it's going to go look for resistance. We've overcome the BBC. This high right here, look left. Is that not that high right there? Whenever price reaches a prior area of resistance, you should expect it to be resistance until proven otherwise. And when price drops to a previous area of support, like this, you should expect it to be support until proven otherwise. So we're above the BBC. We've got blue and climbing, chasing price. Is it possible we go higher today? Well, I think we're going to struggle to get through this zone. So the only window that didn't get filled was this long one up here, and it got filled 2.5 points out of the 4 that we were looking and hoping for. Okay, moving on. The Dow. This is where we opened last night. We ran up to the 20-point window I had drawn and published right after the market opened last night, but we didn't fill the window. If you're new to our corner of the world, one thing you'll learn is that good, bad, or ugly, we show you exactly what happens with everything we do. You sweep nothing under the carpet. You sweep enough stuff under the carpet and you're going to trip and hurt yourself or get caught in a lie. So better to just be honest. I mean, it's even in the Bible. It says, thou shalt not lie. So Good, bad, or ugly, we show you what happens. Now, the Dow, it takes 20 points to get your goal for the day. This was a 30-point window of opportunity based off this market structure right here. And then a 35-point window. And we careened right through both of them. But then the market stopped here. Why? You see where the blue line got above the green line? That's called a bullish cross. When you have a bullish cross that leads to an extended move that found resistance at the zone, the first time price revisits that area will almost always be good support. And it was. Pretty much to the tick. So the market found support based off the previous bullish cross, so now it's got to go look for resistance, which it found at the BBC. Remember, the pullback holds more often than it doesn't. So we get a leg. We don't quite fill that 35-point window, but you filled it enough to get your goal for the day. And then we filled it again, and then we finally filled it entirely. And then we found support at the zone, consolidated, bounced up to the BBC, found resistance that sent us back down for a double bottom right here. See this bullish cross? We spiked that bullish cross by just a little bit. Here it is in play again today with a double bottom right there. We're below the BBC, we're up against a weekly zone, and we have red and falling overhead. I'm thinking the next candle that opens will probably head lower, but I could be wrong. You just see all these wicks to the downside? That's actually bullish. But you see all these wicks pointing to the upside? That's bearish. So price on the Dow may just consolidate sideways into the close and maybe into the high impact news Tuesday morning. The Russell. This is where we opened last night. Above the BBC. We ran up and hit red and falling. And then down we come. We fill the 2-point window. Hit the short target. And then hang on one second. So we found support at the bottom of this window. That sent us back to the BBC resistance, which sent us back to support at the zone. We caught a bounce, but the market wanted to trade lower. So as we look left, this little area right here, where the black step line, which was on the right side of blue and climbing, and gave us the pullback to the BBC that we expect, it got back on the left side of blue and climbing right here. Important prices, important areas are almost always tested, as you can see here. That sent us back to the BBC resistance, which sent us back to the weekly zone, published Monday morning at 6:15 a.m. Eastern. And now we're trying to overcome red and falling and get back to the BBC. Michael's here, so we're going to pause this recap for a minute, and Michael's going to give us a recap of what happened in the live training room this morning, then do a little live trading on the TradingView platform. When I come back, I'll finish the recap of the CTAs and wrap things up for the week with our good word for the day.
Excellent.
All righty, looks good.
Here we go. Good afternoon, everyone. Today is Friday, the 11th day of July, 2025. If you have not taken free trial with us and you want to, go here and click on the purple button right here. There's no credit card required for the trial. Just click on that purple button, and when you do, it will bring you to this. No, not that one. It'll bring you to this registration page. There you go. It'll bring you to that registration page. On this page, all that we ask for is your name, your email, your phone number. Fill out all this stuff down here at the bottom. Make sure you give us a TradingView login ID. Okay, if you don't give us the login ID, we don't believe to free trials. You got to make sure you do that. If you don't have TradingView, click on this button right here to get TradingView. The sale is over, but they still have pretty good deals most of the time. Watch the video. Essential is all you need. Click on monthly. You don't want to pay for the annual, at least not at this point. Wait until they have another sale. Probably at the end of the summer, they'll have another really good sale. Do the annual then. But for now, do the monthly. It's $14.95 a month. If you want 2 charts, plus is 4 charts. Premium is 8 charts. I use premium. Do that. Right? Once you do that, you'll be able to get your TradingView login ID, and you can pass it over to us, and we'll enable the indicators. Get your indicators indicating on your charts. That's where you want to be. When you are taking the trial, that's where you want to be anyway. Results. Today, we had a pretty good day today. We got in there. We got the gold on the very first trade. Took 1 trade in 2 minutes to get to $1,000 bucks. I was on a gold trade. Got 10 ticks profit on that trade. But overall, in the morning session, we're up $1,090 per contract. We had 138 on the NQ, 3 on the Russell, 21 on gold, and 14 on the ES. Put us at $1,090 per contract. The day took 1 minute and 2 trades to get there, as I said, and we took a total of 26 trades. So far on the month, we're 8 days in. So we're about a third of the way in. We're at $6,655 bucks. Right? Are we a third of the way in? Let's see what the calendar says. We have 1, 2, almost 3 complete weeks left in the month of July. So we have 5, 10, 11, 12, 13, 14. Yeah, we're about a third of the way in. It's actually more. Yeah, it's a third of the way. It's exactly a third of the way. And so we should have a pretty good month by the end of the month. If we have more days like this and fewer days like this, then we'll do really well by the end of the month. So today we had our 117th day this year that we got the goal. 131 days since our last non-green day, and 526 trading days since our last red day. On the year, we're at $162,120, averaging $1,385 per contract per morning session. Following the 24/20 blueprint, we are now at $71,862. That is over 14.66 hours. That's quitting when you get the goal for the day. All right, so you stop trading once you get to $100 per contract. Pretty good money. It's averages out to $4,899 an hour. Okay. We should really break it down by minutes, because it's, well, this is the total minutes, right? One of these, no profit. One of these is the total minutes. 83. This is the total minutes right here. So it would be right now 71,862 divided by 880. So we're averaging $81.66 a minute. That's what it works out to. $81.66 a minute. That's pretty good money. Anyway, follow the 24/20 blueprint. If you do that, then you should like the results at the end of it all. Okay. Now the trades today. Most of the trades were on the NQ, but we had a fair amount on gold. I'll start out with the ES because we only had a couple of trades on the ES. Okay. And today on the ES, we had this one right here for +2, and this one over here for +12. And that was it. That's not to say that that's all there was on the ES, but that's all that we took on the ES. All right, there was nothing there. When I went over this in last night's meeting, for those of you guys who missed it, if you're above the YBR, down here is all you need to be interested in to begin with. Right? because this is what actually triggers the trade. This either being aggressive when it goes into the oversold or being conservative when it comes out of the oversold. If it's not going into or out of the oversold or going into or out of the overbought, you're not trading. Okay, so everything down here is what you really need to pay attention to. I just had a thought, something I can do to help with that line of thinking. But anyway, so if it's above the YBR, when it goes into the oversold, you just have to check and see where you are with respect. Like, let's just mark this off here. It went into the oversold there, right? It went into the oversold there. It went into the oversold there. Now, every time it goes into the oversold, it has to go into the overbought and come back down for the next one to matter. This one didn't quite make it into the overbought, I don't think, did it? No, it did not. So this one doesn't count, but the next one does. Okay. This one, where it went into the oversold here. And then I'm just going for the ones that go into the oversold. That one, where it went into the oversold there. Let me slide this down a little bit so I don't have to keep moving it. This one, where it went into the oversold there. This one, where it went into the oversold there. This one, where it went into the oversold there. And this one here, we'll go here. Okay. Now, I don't know how much of this is actually above the YBR or below the YBR. Okay, so if I go up here and I grab this, and I just do this. Well, I'll leave it the way it is. So I don't know how much is above or below the YBR. It looks like all of them except for this one are above the YBR. Okay, so you know you're looking for long trades on all of them. All right, except for that one. Oops, I don't know why I put that down there. Move it all together. They're above the YBR. Did I put one? Okay, makes sense. Okay, yeah, right, so that was right here. That's still above the YBR. So let me pop up the question box to see if anybody's asking any questions about this yet, because this is stuff we went over in the partners meeting last night. Now, once you realize this, you're above the YBR, you're in the oversold, then you just have to see where you are with respect to the midpoint. Right? Here, we're in the oversold, we're above the YBR, we hit the midpoint, you take the next step close. Here, we're above the YBR, we're in the oversold, we're nowhere near the midpoint, no trade. Okay, no trade. This one, no trade. This one, we're above the YBR, we're down in the oversold, it dropped through the midpoint. So then you wait for it to come out. When it came out, where were you? Below the midpoint, no trade. Okay, this one, it dropped down into the oversold, you're above the YBR, it never hit the midpoint. Okay, you can take that if you want to. You can take that. It's a close above the midpoint, on or above the midpoint. You could take that if you wanted to. So I'll leave that one on. So it would be great here where you would go along. This one was the same thing. It came down. It just barely hit the midpoint right there, but you can take that if you want to. Right? But this one right here, you're above the YBR, you're in the oversold, you're below the midpoint, you never closed back up. So no trade. Okay. This one right here, you're above the YBR, you're in the oversold, it never closed back up. So no trade. Right? So in this stretch right here, there were 3 trades that were good profitable trades. You see that? That's all you're looking for. That's all you're looking for. It's really simple stuff. Okay? Really simple stuff. Okay? That's all you're looking for. You have long-term direction given you by the YBR. You have your midpoint right here. Now, you don't need to have the midpoint stuff on there. You know, the midpoint's part of the TV trades triggered. I added that in there, but you don't need to actually have that to see what you need to do. Okay, you can do it manually like this. If you're above the YBR, you have to draw from the last time it came out of the oversold to where it went back into the oversold. Okay, that's how you establish your midpoint. Where it came out of the oversold to where it went back into the oversold. That's how you establish your midpoint. Over here, from where it came out of the oversold to where it went back into the oversold. That's how you establish your midpoint. Okay. right here, where it came out of the oversold to run back into the oversold. Establish a midpoint. Okay, that's how you do it. So I just automated the whole thing in here for you, make it easier. See how that falls right on the midpoint, falls right on the midpoint, falls right on the midpoint. That's all you're looking for, again and again and again. Okay, so on the ES, we just had those two trades, that one and that one, right? Now, I wanted to say that for anybody that's in here right now that didn't make it to the partners meeting last night. It is an actual partner. So after that, we'll go into the gold right now. We'll go gold, Russell, and then the NQ. Okay, on the gold, let's go back to the beginning. Our very first trade on gold is where we got the gold for the day. It was not there. I didn't write it in, but it was right here. This is where we got the gold for the day on gold. Right there. Got 10 ticks on gold on that trade right there. And that's where we got the gold for the day. The next one right here, we got another 10 ticks on that, and then we stopped out, and then it put us at -5. So we went from 10 to 20 to -5, and then we had to break even. And then all the way over here, we got another +10, got us up to 15. And then we got a +6 right here to get us to 21. And that is where we ended it. Okay. So if I go through this whole exercise again, right here. Now I know we're below the YBR in here. So without looking at price, you're only interested in when it goes into the overbought, right? That's when you have to start looking at price, when it goes into the overbought, because you're below the YBR, right? That's when you have to start looking at price. So break it down to little tiny baby steps. Now this one didn't make it into the oversold, so this one doesn't count. Okay. This one did. It came all the way back up. I don't know if we're still below the YBR over here when it goes in that one. But that's it. Now this one here, I don't think this made it into the overbought. No, it didn't. Okay. So that's it. Those are the times that it went into the overbought. Now, if you're below the YBR on all those, and you are, then those are all potential trades, right? So where is it with respect to the midpoint? Nowhere, right? You gotta look for where it comes out. Where it comes out, right here, nowhere. But right here, where it came out of the overbought, you have a trade. So that's a good one right there. Okay, right here, you gotta wait for it to come out of the overbought. Right there, that's a trade. That would have stopped you out. Right here, you gotta wait for it to come out of the overbought. And this one's kind of tough because it came out right there. It gave a down close right there. I think I saw that one this morning. I didn't take it on purpose because it wasn't below the midpoint. All right, so I let that one go. So I'm going to take that one off. So far we have a nice win and a stop out. And this one right here went up, it hit the midpoint right there. Then right there is where you take a profit. This one went up, it hit the midpoint right there. And right over here is where you could have actually sold it there and taken something on that, or you could have waited for it to give you the down close right over here. Okay, and taken some profit on that. And on this one, this last one over here, right there, I wouldn't have done that either. That's the same thing that one over there was, that one there. The down close was above the midpoint, so no trade there. Okay, so you ended up with 5 possible trades in this stretch below the YBR, and well, that's all that I saw in there. There's another one right now that's happening, but it's nowhere near the midpoint. Right? It's got to go up near the midpoint. You got into the overbought, but it's nowhere near the midpoint. So right in here, out of the 5 trades, you had 1 stop out and 3 that were potentially profitable trades. Okay. So the trades that we actually did do in gold, we had the 10, the 20, the -15, then the plus the 10, then the plus 6. That got us to 21 overall. And that was it. Okay. So right here, it needs to go flat and get up to the midpoint and then give you the down close. That's what you're looking for. If it closes down right here and pulls it out, it's going to reset the midpoint. So it's going to stabilize the midpoint. That's what I was looking for this morning. It's going to stabilize the midpoint. Right now it's stable. All right, you see how it's been flat for a few bars? That's because it's taken a few bars to get up here into the overbought. If we get an up close now, it's going to be flat up here in the overbought. Then the next bar could be the trigger bar. Okay, on the gold. All right. That was all that. Now the Russell. Let me just spread the Russell out so we can kind of watch the gold and see if it turns into something for us. Okay. So on the Russell, we'll go back to the beginning. Actually, I can go to just 2 here. Lop everything else off. There. So on the Russell, we can go back to the beginning here, and here we are. On the Russell, we started out with a break even. Then we picked up 3 ticks. I'm going to break even, another break even, and we picked up 5 ticks. It got us to +8, and then we stopped out, put us at -7. And over here we got a +10. That put us at +3 overall. Okay. During the break, looks like there were a bunch more opportunities in there, but I won't go through that whole process here because we have the NQ to do still, and I haven't placed a single trade yet because I was kind of waiting for the gold to give us a trigger here, but it hasn't. Okay, so now we'll go back out to 4 because the NQ is on the end. And I can't do that thing about just going to 2 things anymore. So I'll crunch these guys up like this. It'll keep gold going over there on the corner. Actually, the Russell's about to give us a trade too. The gold, it needs to hit the midpoint and give a down close. The Russell just needs to give an up close right here. Okay. The ES doesn't have anything going on, but the Russell and the gold both have potential trade here. And why? Well, because you got down into the oversold and because you got into the overbought. When that happens, you look to see where price is with respect to the midpoint. Simple enough, right? Is it touching it? Is it going to close above it or below it? See, this didn't actually touch it right here. It got pulled down, but that's still an okay trade. It's not the greatest trade. I like to see it actually touch it and move down. But because it closed down below the midpoint, that's better than closing above the midpoint. Okay. Give you the down close right here. It should push down to the swing low. That's what it should do. Right? On the Russell right here, you need the up close. Give you a close on or above the midpoint, which is for to pull out of the oversold. Okay, so the gold is a valid trade. It's just on a trade like this, I like to wait for it to pull back a little bit so my stop is above the midpoint. Okay. Okay. So kind of like this pullback right here. Okay, and pull back a little bit right in there. Anyway, let's go all the way back here now. All the way back here. All the way back here. Here it is. Okay, on the NQ. On the NQ. Here we are. All right. So the NQ started up. I'm going to break even on the gold trade. So the NQ started up. Our first trade on the NQ was right here. We ended up with a break even on that one. Then we took this one right here. We got 45 ticks on that. Followed up with a break even. Then another 45 ticks on that. We're up at 90 at that point. Then we had, wow, we went a long time with no trades. It seems like a long time. A lot of bars anyway. Got a break even. And then we had a small win right there. And we picked up 16 ticks on that one. Got us to 106. And then we picked up another 16. Got us to 122. Yeah, that's right. And the 16 goes to 122. Then we had a break even. And I don't know why I was dealing the 16s today. We got another 16 there and got us to 138. So the last 3 trades were 16 ticks on the NQ for us. Right. And then I explained to Jeff this whole thing right here this morning. That's why I drew that. I don't know, is Jeff in here right now? Jeff, are you in here right now? Kenneth is, Ron is, Jerry is, Jeff is. Okay, yeah, there you go, Jeff. So you remember I explained that whole thing this morning, right? And I'm out of break even on the gold. Sorry, guys. So we're above the YBR, right? When you're above the YBR, you're only interested in price going down into the oversold. So right here, you're interested. Right here, you're interested. Right here, you're interested. Right here, you're interested. Right? Does this help, Jeff? You're only interested if you're above the YBR. There's the YBR. You know you're above it. So you're only interested when it's going into the oversold. That's when you have to start paying attention. Okay. That's when you have to start paying attention. Even this last one over here. If you're still above the YBR over there, I don't know. Okay. So then you come over here and see where are you with regard to the midpoint. So you were nowhere near it here, but when you came out, you were coming out right up above it. So that's a good trade. This one here, you were way down below it when you got into the oversold. So there's going to be no trade there. This one here, you're way above it. And when you came out of the oversold, you were nowhere near it. So that's not a good trade. This one here, you were right at it. You could have actually gone aggressively long right there or taken a trade right here. So this was not a trade, right? Let's remove the ones that were not a trade. That was not a trade. That was not a trade. This was a trade that went somewhere. This was a trade. That was a great trade right there. And this one right here, when it came out of the oversold, you were nowhere near it. So that's not a trade. Okay. Simple as that. So did I go over all the trades that we did on the NQ? I think I did, right? Yeah, I went all those last 3 or 16 ticks. It goes up to 138. Okay. So it's as simple as that. So if you look at it that way, you know, you're not even interested in anything. If you know you're above the YBR, then you're just looking for things to go into the oversold. When it gets into the oversold, you pay attention to where you are with respect to the midpoint. This would have been a trade right here. This would have been a trade right here. Okay. You're below the YBR. You're only interested right there, no trade. Right here, that would have been a trade. Right here, no trade. Switch directions on that one. Okay. Right here, no trade. When it came out, still no trade. Okay. And then right here, no trade. And when it came out right there, still no trade. Right here, no trade. And when it came out, that right there would have actually been a trade. That would have stopped you out. Okay. That's it. It's as simple as that. Again and again and again. Doing my best to make this as easy as I can. Everybody to see what I see. Okay. My hand is falling asleep. Wow, that was so boring. I put my hand to sleep. Sorry, guys. I didn't have that many trades in there. Yeah, the one gold trade that I didn't even show you. Sorry, I got to break even on it. All right. I should have actually taken some profit on that. That went down quite a ways. I wasn't paying attention. All right. There was something that I wanted to see. I got this alert a little while. That one. I didn't know how to check on it. All right. So we're waiting now. Let's see, all we care about is when it gets into the overbought. All right, now we're in the overbought. We're at the midpoint, so now we just need the down close. Okay. Do I ever set up trailing stops, or do I just look for support resistance levels? What do you mean, Bob? I always trail my stops manually. So it's going to be 23,009, whatever the top is on that. What is the top? 975 down to 475 is what I'm going to sell on that right now. Okay, this is what I'm selling on that. 975 down to 475. Now the high is 10, so it's going to be down to 5. 5 points from the top. Okay, 5 points from the top. Do I ever set up trailing stops? Do I just look for support resistance levels? You mean for targets? Oh, I start with the prior swing, and beyond the prior swing, I look in the DOM, and I look at the leg length. I look at the actual price action. So like right here, if this goes down to here and it goes through there, I'll probably be out of the trade because I'll have taken profit. But if it does do that, and I would want to hold on, this is the leg length. So that's what it should do, right? That's all they would expect out of this, is that right there. But when it starts getting down here to this level, we just went up some, didn't we? 1150. So this is going to be 650. When it starts, getting down here to this level, to the prior swing low, I trail my stop really close because that's where it's likely to find support right there. And when it finds that support, I don't want to give up any of my profit. I don't want to give up too much of my profit. So I trail my stop really close. If it blows through it, then great. I have a target. I have on the NQ, I have a 45 tick target. So the 45 tick target's right about down here. And it's 45 ticks is what, 9 points from the top. So if, let's say we entered in right here at 6.5, it'd be 9 points from 6.5. So it'd be all the way down here, 9 points. So that's 6 points, 7, 8, it'd be down here at 7.5. And what is this at? 88.75. So I'd be looking at 97.5. Right, it'd be right at the swing low. Just about is where the target is, the 45 tick target. This isn't going to be a trade, so I'm just going to cancel this. It went up too far. So even if I got a down close right now, the down close would be right here. You don't want to take it. If it's above the midpoint coming out of the overbought on a short, you don't want to take that trade. Wait until it resets. Okay.
Sound advice.
Yes. Leave it alone. You see like this right now, the swing low, we've done 100% retracement right here. We're all the way up to the swing high right here, that level. Right. So now from there to there, it's about the same. From the swing high to the swing low, we just flipped the YBR on us. So now we're not interested in short trades at all. Now it's got to reset it and stabilize the midpoint. So it's got to get down here into the oversold. And when it does get down into the oversold, this is what it's going to be using to establish a midpoint. It's going to be using this low right here, where it came out of the oversold right here. Because we just flipped the YBR, it's going to be using that to establish a midpoint. Okay. Just so you know that. That's what it's going to do. And it's going to take it a couple of bars to actually do that. All right, it's 129. I talked all the way through this. I didn't take a single trade. I'm taking all this. I did take a one break-even trade here that you guys didn't even see. Sorry about that. Okay. I guess that's it. I just, sorry, my mother just texted me something. What's going on all over the place. All right. Well, that's going to be it, guys. If you haven't taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Just click on that purple button and you will be sent everything you need to get into the room in the morning, right? Click that, go to the registration page, fill out the registration page. Get your indicators indicating on your charts for you. We're up to $1,090 per contract, right? Took a minute and 2 trades to get to $1,000 today with 10 contracts. Right? And that is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Mm-hmm. Did you see the high on Bitcoin?
I did, but unless it went higher just recently, but everything else is going up with it. That is fantastic. I have been kind of peeking at it every now and then.
Last time I looked, it was 118,000.
Yeah, I think it actually went over that.
Did it move higher than that?
118,894 was the high.
Nice.
Yeah, so it almost went up to 119. It's gonna hit 120 today, I think.
It's probably gonna hit 120 here in Phoenix as well.
Yeah, probably. That's 20% in the last, well, within the last 2 weeks. It's up 20%. Bitcoin is on fire. And my XRP was up 20% in the last 2 days, I think. Something like that. It's up 50% in the last month, or 2 weeks. So,
okay, let me ask you the all-important question.
Oh, yes.
Recap of the morning session.
Today it took 1 minute, one trade in 2 minutes to get to $1,000 with 10 contracts on.
Brilliant. Absolutely brilliant.
Thank you very much.
Gary, if you're tuned in, hang on, I'll send you a quick message. I'll send you the message after I finish the broadcast.
Yeah, Gary's not tuned in.
Okay, I'll answer him.
Okay. Unless he's tuned in on YouTube. He could be on YouTube.
He could be. All right. Got to pick up where I left off. Okay, here we go, guys. In queue. All right, these are the windows we drew in live on the broadcast yesterday. And we got about 10 points out of this move. It was a 13-point window. Well, it was a high. 230.50. Yeah, we didn't quite get it on. But that's okay, because on the way down, we caught these 15 points. Now, in the NQ, that little window of opportunity right there, it's worth $300 per contract traded. If you earn the right to trade 10 contracts, well, then it's worth $3,000. Now, the market also came down and filled this 10-point window that was drawn. This is Friday, Thursday. We drew this on Wednesday, and it filled last night beautifully and found support at the bottom of the window. Support will always send the market looking for resistance, which it found at the BBC. Pullback holds more often than not. So then we get a leg to the downside. First we hit the zone and bounce, and then we finally get through the zone and consolidate. And then we put in a low right here. And not necessarily a spot I would look for support to come in. I would expect it to be either here or here. So it spiked that area just a little bit. We're always suspicious of just a little bit. So support is now going to send the market looking for resistance, which it found at the zone and the BBC. It took 1, 2, 3, 4, 5 attempts to finally get through, and we hit the underside of the short target. But we managed to get through that, and we hit the zone. These are 30-minute candles. Resistance at the zone, resistance at the zone, resistance at the zone. Finally overcame the zone. Now we're pulling back to the top of the zone. So if that holds, we could see higher prices. But notice right here, we get a bearish cross. Okay? When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. So you had a bearish cross and a zone there. So those wicks are poking up above that bearish cross, and then we finally actually get above it, but We do close above it, but now the step line has crossed from the left side to the right side of balloon climbing. So I suspect we're going to see a retracement back to the BBC. When that step line crosses, that's a really reliable indication that price is going to retrace to the BBC. Whether it crosses blue and climbing or red and falling, look for retracement back to the BBC. And possibly points below in this case. Okay, crude oil. This was the open last night. We dropped to the weekly trading zone, found support, which sent us up to the BBC and a weekly zone where we found resistance, which sent us back to support, which sent us to resistance right here, market structure. Resistance sent us back to support. We fill the 10-tick window, 66.65 to 66.65. Found support at the short target. Turned around, got up to the zone, consolidated, and then we took out this double top here from today and yesterday. Made it through the long target, found resistance at the zone. Now, these are the zones that were published Monday morning at 6:15 a.m. Eastern. So then we go on to fill the 10-tick window that we drew live on the broadcast yesterday and the 20-tick window that we drew live on the broadcast yesterday. It's a beautiful thing. I love it when that happens. Step line is crossed to the right side of balloon climbing. Now, balloon climbing is directly above price, and the step line has crossed to the right side. So we might run up and tap balloon climbing, creating a double top in this area here, and then we get our retracement. At the zone, we might get a little bounce, but ultimately I think we come back to the BBC. It's pretty much how it works, time after time. Does it happen every time? No. Very few things happen every time in the markets. There are a few things, and I always share them with you. But I'm not going to delve into them today because I got things to do and you got things to do. All right, here's where we opened last night. We had drawn a 2-point window and a 4-point window on gold yesterday on the broadcast. We did fill the 2-point window. We nibbled at it here, and we actually filled it here. When you approach a window of opportunity, go to your range chart and make sure that the big picture opportunity aligns with the smaller time frame reality so that you can enter with surgical precision. You don't want to enter a window of opportunity if the smaller time frame tells you you're about to get a pullback. Let the pullback happen and then enter on the move, whether it's up or down. So we hit the long target, consolidated the zone, a leg, a retracement, a leg, a retracement, pullback held, got up to the zone, consolidated. Now this high here on gold, where did that come from? Guess I'm going to go a little further. Come on, get up there. Top of that window, which was based off that market structure there way back on June 23rd. People ask, how far left do I have to look? As far as you have to. Okay. So now what's happened is the step line is crossed on gold. We've pulled back to the zone support. We have red and falling now overhead. So this green candle may find resistance at the step line. And then we either consolidate sideways and the BBC rises to meet price, or off this resistance here, we just drop to the BBC. Those are the two scenarios that I see. Silver. Oh, you gotta love it. Now, this is Friday, this is Thursday. So the Thursday low was around 36.60. Let me write that down. 36.60. So we rallied yesterday, but price rarely moves in a straight line. Leg, retrace, leg, retrace, leg. We fill that 9-cent window. That's $450 per contract traded. We fill the 5-cent window. Actually, at the time I drew that, I think that might have been a short window. So we'll just say it didn't fill. We overcome the zone. And then last night, market opens. It opens right here. And in the first 30-minute candle, we exceed the long target. But you only need 2 pennies in silver to get your goal for the day. So we opened at 37.65 and ran up 4 pennies to the target. That's $200 per contract traded. But we ran up to a high of 37.84. So that would be $700 per contract traded if you rode it all the way up. So you get a big move, you get a big retracement. Came back to the BBC to the tick. Another leg, another retracement, another leg, another retracement. Now what's our high on the session? I think that was the highest weekly zone this week for silver. It was. But we actually made it up to 39.04. Okay. So that's $2.44. Hey Siri, what's $2.44 times 5,000? You're looking at a $12,200 per contract move. Yowza. Where am I looking for it to actually go? I don't want to scroll that far. $50. I already said it earlier in the broadcast. Now we've been there twice in history. This time, maybe we hit it, back up a little bit, power through it. And what I want to see is I want to see on the retracement that $50 resistance in all of history becomes support on the pullback. That can send us to $75 to $100, maybe more. Step line has crossed, so we should anticipate a retracement. We could find support at the zone. We could find support at any of these lows along the way. You see how price spiked, balloon climbing? It's directly above price, but now it's back below it. And we only have so many hours left in the trading session today. So a lot of this information is going to be valuable to you Sunday night when the market's open. Okay. So let's do what we do at this time each day. A window of opportunity from $39 to $39.03. So that's 3 cents. That's $150 per contract traded. Now, on the short side, Remember, for me, on a 30-minute chart, prices got to get below the VBC before I look for a short opportunity. And this one looks pretty good, but you see how the step line, it crossed and then it kind of blended back, and so that's, yeah, I'd rather look for something that's just really clean, and this is really clean. So on the short side, sell 38.01 down to 37.96. That's 5 cents. Now, we might never see that. Boy, that would sure make my day or life. But we'll probably get some deep retracements. I mean, this is a huge move. This is a $12,200 move we've had over the last 2 days. So, I mean, about a 50% retracement would bring us down about $6,000 per contract. So that's a little over $1. When the price of silver moves $1, that's worth $5,000 per contract traded. Okay, so that covers silver. NQ. 23037, 37 down to 25. Okay. Now it's hard for me to draw this exactly, so you probably want to write those numbers down. Let's see what that looks like. 39 to 27. So that's 12 points. At $20 a point, that's $240 per contract traded. Now that's a long. What about the short side? $892. Let's call it 872. From 92 to 72, because that's easy math. 20 points. $400 per contract traded. Right there. Probably not going to see it today, but we could see it Sunday night. Remember, we don't have any high impact news until Tuesday. All right, the S&P. Now, somebody mentioned the London high, which would be right there. So we almost made it up there. 63.0875, 63.0750. So we missed it by 1.25 points. All right. So we're looking to buy 63.05 up to 63.07. 63.05 to 63.07. It's the high of this candle. 7.5. Okay. So that's 2 points. It's enough to get your goal for the day if you don't already have it. And on the short side, I think we got room for 2 points there. What's the low of this candle? 93.25. So I really need to be at like 92. That low's 91. Yeah, it's just a little too tight. So I'm going to be the conservative fellow that I am and go down here. Remember, sometimes windows get filled. This is Friday, this is Thursday, this is Wednesday. So we drew this window on Wednesday. And when did it get filled? Today, Friday. Now what do we got? Selling 62. I wanted to make that 82. What's up? All right, 62.82 down to 62.80. Okay, it's another 2 points. Okay. Now, just on the chance that the ES kicks it in gear, rallies into the close, or rallies Sunday night or Monday, we can go ahead and throw this up here. That would be, I'm going to make it 25 up to 29. Okay, we got to push this up just a little bit. Get it? A little too far. Okay, 63.25. Yeah, 63.25. Write it down. 63.25. 63.29. 4 points. All right. 25. 29. Yeah, 4 points. Well, I should probably learn how to spell if I'm going to do this. Oh, once it's inside there, it's so hard to get to. All right. Note to self, spell check before. All right. So we can get it back up there. 25 to 29. Write them down. Write them down. 25 to 29. Okay. All right. Oh, that's really got to go up a bit. Not much. Whoa, way too much, dude. Well, I guess that's where it wants to hang out. Of course, that'll be too much. No, not really. 63.25 to 63.29. Okay. I'm good with that. So we got a long window here. We got a long window up here. We got a long window down here. We got a short window down here. And looking left, we filled that window today, but we still got this 3-point window down here that goes way back to the beginning of the week, and it still hasn't filled, so it's still in effect. Still active until triggered, until price enters the window. Okie doke. Russell. So we fill this 2-point window, then we filled it again. We didn't fill the long window here, and we certainly didn't fill that long window. Okay. Fair enough. What we got? 79 to 83. That's a little much. Just back this down below the high of that candle. Okay. So now we're looking for 79 to 82. So we'll call that 3 points. And that right there, where the black line got below the blue line, turning it into the red line, red and falling. Yeah, that messes up me putting in a window here. So I shan't. What about let's see what the low of this candle is. 50-60. That won't work. At 53 and a 51. That'll work. $53 and a 51. Need to bump that down just a wee bit. Good enough? No. Too much? No. That'll work. So 53 to 51. That's 2 points. You want to be out by the time you get to the low of this candle, because that's potential support. Crude oil. So these windows from yesterday, the 10-tick window got filled, 20-tick window got filled. We're up against resistance. The step line is crossed. We're up against blue and climbing, and we got a double top right there. This was the high from yesterday. The price should turn down right about here. So all right, let's see what we got. $68.85 to $68.75. 10 ticks. Going back 2 days to find the proper market structure. Oh, It's ticks. I forgot this is crude. Okay. Short side. See that wick right there does not give us enough room, which means we got to come way down here. And don't say, oh, price will never get there. Well, you never know. You got to embrace all the possibilities. So 67.05, 67.15. Then there's a 20-tick window down here in case price really drops. Gold. Long window, simple enough. Enter at 33.76 up to 33.79. 76 to 79. That's 3 points or $300 per contract traded. If you've earned the right to trade 10 contracts, it's $3 grand. Then on the short side, all right, so it'd be selling 33.47 down to 33.44. Probably went too far. $33 to $40. Yeah, there we go. 47 to 44. That's also 3 points or $300 per contract traded. And last but not least, this 20-point window didn't fill. Price entered the window, but sometimes you get stopped out. But this made up for it. Again and again. Now, what excites me on the long side? Not much. You got potential resistance here at 690. And you got potential resistance at, yeah, there's a 20-point window there. Can I nail it? Well, that's another question. We'll try. Should be 720 down to 700. I don't want to dicker with it, so just write it down. 720. No, actually, it'll throw me off Monday if I don't bring it down. Oh, 720, 700. $20 points, enough to get your goal for the day. Well, that's long, so talking about buying 44,700 up to 44,720. Need to make that a little bigger. Should do it. Yep. On the short side, yeah. This should work. What do we got? 560 to 540. Okay. It's 20 points on the short side. All it takes is a little patience to let price get there. And if it doesn't get there today, maybe Sunday night, maybe Monday, maybe Tuesday when the news comes out. Or it could happen in the next 10 minutes. That's the thing about the market. Nobody knows what's going to happen next. However, once you learn how to read a chart and use our indicators properly, you can know with a high degree of probability what the next high probability move is. Example, Logic 247. Over 361 weeks, we issued exactly 20,000 individual handcrafted alerts. What we averaged on a weekly basis over those 361 weeks is 12% of the alerts being stopped out based on market structure and the simple process we teach all of our passport holders. Let's take one last look at the daily chart. We've been trapped the whole session. Resistance overhead at blue and climbing, support below at the black step line. Keep that in mind Sunday night when we open. Now, Sunday nights are about the only time we see meaningful gaps in the indices. Sunday nights and earnings season. When there's a big name reporting and there's a big hit or a miss, that can create a gap when the market reopens at 6 p.m. Eastern. So I know when the market gaps on a Sunday night, people have a tendency to want to chase it. Well, let me say what Joe said. Don't. Just let it move and then trade the reaction to the move. Okay. If it gaps higher, let it retrace back to the BBC or some other meaningful place, and then trade long back to the initial high. Okay. It's a smart way to do it. How many times have you chased a move and it's uncanny the second you enter the market, it reverses and goes the opposite direction? Come on, how many times? More times than you can count. Yep, true story. I know. Been there, done that. Okay, well, it's been a great week. If you're ready to become a member, send an email to support@cfrn.net. In that email, say, I want to become a member. If you're a veteran, say, I'm a veteran and I want to become a member. Because Valerie is going to respond to you with an email that explains all that it means to become a member. Everything you're going to have access to. She'll also include a link so you can click it and seal the deal. And if you're a veteran, we want to thank you for your service, so we're going to provide you a link with a significant discount. First off on the list she sends you will be the live training room. That's 2 hours of live interactive training. Real trades and real markets with real money. 2 hours every trading day. Michael explains every move he makes, every trade he takes, and the reason why. And you see the results right before your eyes. There's no shell game going on. It's right there. You see it. Okay? And what you should be doing is listening, learning, asking every question that pops into your head, and trading along in your demo account so you can qualify to go live. I mean, these statistics are startling. Futures Magazine wrote this article way back in 2006. 9 out of 10 new traders fail. They gave all kinds of facts and figures, but they never answered the question, why? So my inquiring mind embarked on a journey to find out why. No teacher. It's pretty hard to learn how to do anything if you don't have someone to teach you how to do it. Not that you can't figure out how to do something on your own, but it's going to take a lot of time and treasure. So, if you want to shave years and tens of thousands of dollars off the learning curve, find somebody who will actually teach you how to trade. If it's not us, find somebody else you can trust. Just don't go it alone. Trading's a lonely business. A lot of our guys don't need the live training room. They just come in every morning to, feel like they're part of something bigger than themselves, and maybe for some background noise. Because they already understand the strategy, it's really quite simple. But they like to hang out, make pithy comments, and ask the occasional question. But if you're new, you should be asking tons of questions. Until you get to the point where you're asking questions that you already know the answer to. The second you type it in and hit send, you go, oh, wait, I know the answer to that. And then you're going to hear Michael give you the exact same answer that you knew he was going to give you. Because it's rules-based trading, the answers don't change. Now, I wish I could promise you would be the 1 out of 10 who succeeds if you become a passport holder, but I can't. We give everybody the same information. We give everybody the same tools. Sadly, some people don't have the patience and self-discipline to sit on their hands until a proper trade setup emerges. And that's the one thing we have no control over. Your patience and your self-discipline. I guess that's 2 things. We have no control over that. So we give you the information, we give you the tools, but you got to dig deep down inside of yourself to come up with the patience and the self-discipline. Along with 2 hours of live training every trading day, private one-on-one mentoring at your request. Strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. It's how markets work. That's why it's so important that you learn to read a chart so that you know where to anticipate resistance and where to anticipate support. You get the concierge trade alerts the second they're published each evening. Most days, 5 minutes ahead of the Globex Open. Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Thursday afternoon, you'll get an invitation to the members-only workshop Thursday night. And last but not least, you get the golden key that opens all the private channels in Telegram. We have public channels for the folks on the trial so that you can get the alerts and so that you can talk to our traders. People who, just like you, at some point in their life had spent years and thousands of dollars trying to learn how to trade and just blowing up account after account after account. We give you the opportunity during your trial to talk to our traders. So you don't have to believe us, right? Because we're the man, okay? And we're just trying to sell you something. Talk to our traders. Ask them what they've learned, how long it took them to learn, how successful are they, and how have they been treated. Number one, they're going to tell you they've been treated with dignity and respect. Now, that's a two-way street, so keep that in mind. Everything a trader needs, all under one roof, one low price. You could send that email today and be a full-fledged passport holder Sunday night at 6 p.m. Eastern when the market's open and we go to work. Our week starts Sunday night at 6 p.m. Eastern, and we work around the clock until Friday afternoon at 5 p.m. Eastern. Okay, we're going to wrap it up with a good word for the day. Yesterday we talked about going the extra mile. Today, knowing the season you're in. Ecclesiastes 3:1. To everything there is a season, a time for every purpose under heaven. Your life's purpose is connected to a specific time and season. In other words, it will have a beginning and an ending. Some of God's purposes can be fulfilled in a short time. Others take a lifetime. You won't always be able to do what you're doing today, or at least to the extent you're doing it now. The Bible teaches in Deuteronomy 33:25, as your days, so shall your strength be. That's why some of the world's best sports players transition into coaching. Here's 3 important observations. Number 1, you must understand and maximize the season that you're in right now. You can't change the season you're in because that's God's timing. So understand the season you're in and make the most of it, because God has you in that season, whatever it is, for a reason. Number 2, when one season ends, you must transition graciously into the next. Now, I'm going to be honest with you, bare my soul. I had a business downtown Phoenix. Some called me the king of downtown Phoenix. Jokingly. But when I sold that business and transitioned into trading, trust me, in the beginning, a lot of ups and downs. Mostly downs, because I didn't have anybody to teach me. I tried to hire somebody, and I offered good money. Nobody wanted to share their secrets. That's just foolishness. Anyway, there's that one song by Green Day. One of the lyrics goes, I sweep the streets I used to own. Yeah, that was me. I was a little bit depressed. So what was I failing to do? I was failing to transition gracefully and graciously from one season to the next. Now, in hindsight, I can see it so clearly. But as it was happening, I was just bewildered. Number 3, Learn to enjoy whatever season you're in. Here's an interesting phenomenon. Elijah passed his mantle of power to Elisha. But nowhere do we read that Elisha passed it on to anyone else. But when Paul passed his mantle on to Timothy, it didn't end there. Paul told him in 2 Timothy 2:2, "And the things that you have heard from me among many witnesses, commit these to faithful men who will be able to teach others also." Instead of lamenting that he had run out of time, Paul rejoiced in knowing that God had helped him fulfill his assignment. He said in 2 Timothy 4:7, "I have fought the good fight. I have finished the race. I've kept the faith. Finally, there is laid up for me the crown of righteousness." The truth is, God only gives you grace for the season you're in. And when a season ends and it's time to transition, His grace will lead you to His next place or next season elsewhere. So, pay attention to when it's time to move on. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.